And for more on the Fed, the consumer confidence in the economy, we're joined by Lynn Franco, economist and director of economic indicators and surveys with the Conference Board. Lynn, always a pleasure seeing you. Thanks for joining us again.
You're quite welcome.
Lynn, let's start off with Janet Yellen's comments today. The Federal Reserve Chairman saying that she's going to be patient. It seems that she is planning on keeping the markets fully abreast of what to expect in terms of a rate hike. How unlikely is a June hike at this stage?
I don't think it's off the board at the moment. I mean, she has been very transparent, and I think she's keeping the market investors very, abreast of the situation, and did say that for the next several meetings there wouldn't be any rate hikes. So I still think we're looking at some June, July, maybe August, summer into early fall possible rate hikes.
On a meeting-by-meeting basis, she is keeping very close watch on the situation in Europe and the slowdown of growth there. How much of an impact should that have in the Fed's decision?
Well, we know it's having somewhat of an impact, but so far the U.S. economy has sort of weathered the slowdown, the global slowdown, quite well. So it will continue to play a role.
Lynn, some are saying that perhaps we'll see an increase rate in smaller increments than the conventional 25 basis points to sort of edge investors gently into that. Do you think that's possible?
It could be possible. I think what we're expecting really is sort of a rate hike come, summer, early fall, and then perhaps a little pause before the second. So we're not expecting them to be consecutive and, back to back.
All right. Well, Yellen did say that U.S. labor markets do have some room for improvement. What's the feeling on that one?
We're going to continue, I think, to see robust job growth. We're going to continue to see that push the unemployment rate down. And hopefully on the tail of that, we'll see a little bit of wage growth, which has sort of been very lackluster so far.
Now, wage growth is probably one of the reasons that consumers were feeling less confident in February. Consumer confidence falling more than expected, down to 96.4. from an upwardly revised 103.8 in January. Now, keeping in mind that that January number was, in fact, the highest since before the recession, the highest since August of 2007. So, Lynn, what the heck happened in February?
Well, we had such a large gain in January that we had a little bit of a retreat in February. Overall, they're still confident. They're telling us that the present situation continues to be quite strong, so the economy continues to be on track. In terms of the expectations, it's not that they suddenly expect the situation to deteriorate. It's that they don't expect any momentum to build up. So I think it's still sort of a silver lining and a positive report.
Status quo, even though we have this boost, as many are saying it, to consumers from lower oil prices, oil below $50 a barrel, gasoline prices across the country around $2.50 per gallon. Why is that not translating into more spending and more consumer confidence?
Well, we actually did a survey on this, and the fact is that consumers don't expect prices to stay this low. I think 85% said they expected prices to climb up by summertime. So I think there's still sort of an acceptance factor at play. So for the time being, what they're doing is really sort of saving the savings and not spending it.
All right, that's a welcome change from usual U.S. consumer behavior. Speaking on spending and saving, what are we seeing in terms of that?
Well, we're seeing that, right now it's a sort of a consumer-driven economy, and we expect that to continue to go forward because we're still seeing employment gains. We're seeing a little bit of wage growth gain. And I think as consumers begin to see that, gas prices are going to stay low, there's going to be more of a willingness to sort of begin to spend the savings.
Well, we mentioned hiring. There has been a steady growth, around 200,000 jobs added per month on a regular basis for a while now. Are younger people finding it easier now to get jobs? Those 22 to 30-year-olds, are they getting hired at a quicker pace than they have been? Because that was a big sticking point in terms of the unemployment picture.
I think it still is. I mean, but we are seeing that the growth in employment is spreading a little bit more.
Industries?
I think we're seeing pretty good growth across all industries. We're seeing the percent of people saying they can only find part-time work going down a little bit. So I think we are making improvements. It's just obviously slow and steady.
Lynn, I want to talk to you very quickly about the housing market. Case in Shirley coming out today saying home prices grew at the slowest pace in 3 years in 2014. They were up 4.6% this year, so still rising. But that rate of growth has decelerated. Is this a good thing?
Well, we've seen prices gone up going up. We've seen the inventory going down. And that's happening is for those wanting to step into the market, especially the first-time buyers, it's making it a little bit more difficult. So I think we're still going to have sort of this slow and choppy recovery in housing in the months ahead.
All right. Always a pleasure. We're going to have to leave it there. Thank you so much, Lynn Franco, economist and director of economic indicators and surveys with the Conference Board.